Well, that was fun. Good morning, everybody. Give me just a second to get everything set up. Looks like I got some sticky keys going or something. I had a studio driver that needed to be updated, and I thought, oh, I have time. I'll go ahead and do that before the stream. And then I got the black screen of death and couldn't see anything. And now I got to get my OBS back, and we should be good to go. I should have known not to mess with displays right in front of a live stream, but trying to get ahead. How about you guys on the Zoom? Everybody good there? Thank you, Hugo. I appreciate that. Almost there, then we're good. So hopefully y'all had a good weekend. I did. It was a great weekend. Just this NVIDIA update this morning. Well, I'll just have to upload the YouTube one after because it's not over there. All right, we'll deal with that later. Oh yeah, was you invested in the game last night? I used to be a big sports fan back in the day. Then all the players started being independent and private, and there was no team loyalty, and I just kind of gave up on it after that. All right, looks like we're good to go. Otherwise, I've got it recording on Zoom, so you know, I'll upload to YouTube afterward. All right, so good morning, everybody. Volatility is alive and well. The call wall rolled back down a little bit. I shared that picture with the daily posts to, keep track of that thing. NASDAQ is down 0.25%. Wow. Guess I'm going to have to restart a couple of these. Small caps basically flat with Hong Kong and the Dow. Little bit of green if you go far enough. So we're not going to be looking for anything out of the close of the European session today. No kind of a assistance or boost. And we really don't have a lot going on. A couple of Fed speakers chipping their teeth. It isn't going to be helpful. It's likely they don't have anything to add to the conversation. They're just reiterating the same old, and a bunch of arguments still on funding DHS, and the government is still shut down. So, you know, not really expecting much in that direction. It's a lot of afternoon stuff, which does add some caution to the afternoon session when we're focused on playing those 0-day trades. Oh, again. So I think today is very likely going to be one of those hurry up and wait days where we can't get anything done, can't keep a breakout, can't go anywhere, can't keep it. Any work that we saw them doing last week to begin pricing in a rate cut seems to have stalled out. We're not seeing any real changes yet. And that's what I was trying to caution last week. When you see little shifts to the projections for a rate cut, they're not good enough, right? You want to see a real change, a radical difference in the numbers. And if there's just a couple of percentage points up or down, it and it only happens one day and then you don't see it continue the next day and the next day, then there's not a lot of validity to it. At least it kept my changes to the indicator. All right. Now, as far as the precious metals and like silver and gold, that significant drop that we had is still the boss. Nothing has changed there. So we've been getting these rallies back up, but they're lower highs and then they end up giving us lower lows. And that is what we're focused on. 2 higher highs and 2 higher lows is a trend, and 2 lower highs and 2 lower lows is a trend. Right? That's how it all gets started. We've got a MACD cross for anybody who cares about such things. That has its own weight and connotations. Looking at things on the big screen, like the weekly, the monthly, then yeah, sure, everything's fine because we've only got one pullback and we're not yet developed lower highs, lower lows, anything like that. It was a significant drop. And even if the run up isn't done, we broke things and that needs to be fixed. It needs to digest, it needs time to heal. So it needs to stop falling, and no more lower lows would be a really good start. But then it's got to work its way back up. So, if you're chewing on all that FOMO and you really want to get involved with these, then at least have a game plan for your entry. There's a gap that needs to be filled up here, like 80. Thought it was close to 81, but it might be 80 and a half, like that. You could focus on that as a trigger to get long or stay long. And or a retest of this really big bar from February 5, retest the midpoint of that. I think getting in along the lows of that bar or the midpoint of that bar would be better than getting in on the breakouts. But precious metals are broken. They haven't just crashed and burned. We've had these pushes back up, but they're all pushing up into lower highs. So, it's not like the situation has resolved itself. All right, we got moderate risk coming out of the White House today based on his current schedule. TV interview at 3 o'clock. There's always the opportunity for a gotcha moment or for him to just, lob some Molotov cocktails at the market. Who knows, right? Volatility does wake up while he's live, and so there's our risk for the afternoon. Otherwise, it's a pretty sleepy day, and there's no reason to suspect we're going to get anything done. Let's just start out here on the daily real quick. So we're holding above the orange line, which is the 50-day moving average. But the big wide range continues, right? We've been in it since like October, November. GTFO, we got to get out of this box before we do anything else. Earlier, we were above all the major moving averages. Then we cut down through them. Now we're trying to push back up through them again. But they're all tangled up. They don't have a lot of value here. They're not helpful in this situation. But yesterday's price is, right? And we talked Friday about the opportunity to get something like a TRB. The TRB would have gotten us all the way back up here in one shot. That's what makes it so awesome, right? Get one bar, one solid push, and you're done. Well, we got a really big bar yesterday, and we managed to close outside of Thursday's range. And then today, we fell down into Friday's price and into Thursday's price after getting an inside day breakout that we couldn't keep. So now we're just chopping around up here inside of all these wicks. Thursday's wick zone and Friday's wick zone. Because of the big push on Friday, it's likely that we don't have enough juice to continue the move to get back up. Since we didn't do it in a single day, TRB is off the table. Instead, we'd look for the next couple of days to get us back up there. And that would be more of a V-shaped recovery, or we could have used an example of a U-shaped recovery. But really, with this big bar from Friday, the U shape is kind of off the table. So, we're looking at something more akin to that, right? Multiple bars on the run back up, or even something like this, multiple bars with opposite candle color on the way back up. So today could be that opposite candle color. And then, after that one day, maybe we get that outside bar and then a few more positive days and we get back up here. Either way, the focus is still to the upside at this point. Any consideration for a downside move, we'd have to consider the midpoint. 6,900 lines up really well for that. That's kind of a long ways off. So if you want to focus on 69.32 and the 50 period daily moving average, it's around 69.20 and then 6,900. But once we get below 6,900, 67.50 doesn't look that hard to get to. I know it seems like we're jumping over a couple of levels, but those levels don't have any validity. We can see that from Friday and from Thursday, the way that we cut through one way and we cut back through the other way, like they weren't even there. The call wall rolled down a little bit, so we can see it and focus up here, 70.20. And the put walls rolled up into 68.23. It didn't move, right? We can see that in the picture. It was moved up at some point. That's where it's at. So we can see 4 of the levels: volatility, trigger, zero gamma, put wall, call wall, all tangled up in this time frame here. And then while it doesn't seem like a wide range, it's a really wide area, right? We're looking at 300 points from 67.50 to 70.50. Lot of room to run like a hamster on a wheel, putting in a lot of effort without getting any real results, right? Not getting anywhere. $97,000 in the overnight. So we've got a lot of volume in this participation. They were in there, they were getting it done. We're just not going anywhere. The fact that we had an inside day breakout and we wasn't able to keep it kind of tells us quite a bit. Once you get that sort of a breakout and you give it up, it's hard to get it back again. So I don't want to say that we can't go back up there, because of course we know that we can. Price can do whatever it wants, but it's hard for price to get that inside day breakout and then give it up and then get back up there and take it again. So especially after it's been hours since we did get there. So we're going to need a really big headline or economic event or a broad push from the market to get us back up and out through the top of yesterday. So it's not impossible, but you should see it coming from a mile away. It shouldn't be subtle or sneaky. I don't think that we can slow grind up through that level at this point. We're going to need a really big macro trigger. And we just looked at the economic schedule. There's no reason to think we're going to get that today. Yeah, I know it's not coming up on YouTube today, but thank you for the warning. The NVIDIA driver update that I did broke my OBS connection with YouTube, so I'll just have to manually upload it after the stream is done. All right, we got to one edge relatively early, but we didn't get all the way down there. We stalled out. So in this case, close isn't close enough. There is a little bit of a trick to all of this, by the way. Depending on what platform you're using. See, I think it's TradingView that draws the lines based on where we closed on the previous day. And on Thinkorswim, it draws the lines based on where we open in the Globex that night. That gap is this gap's difference. So if the lines had been drawn based on one versus the other, it's very likely this would have counted as a hit. And if I go over to TradingView, since it does it different than Thinkorswim, I wouldn't be surprised at all if it already is a hit, right? Nope, that one's not a hit either. So they're both showing we didn't hit it yet. Still just do the math. If we had not gapped up, that would have been a tag. So do we count it as a tag anyways? Whatever your answer is, stay consistent with it. I'm not going to count it as a tag, but I will recognize that the move has been made, right? It's not about hitting the line. It's about recognizing how far we've moved. So at this point, it doesn't owe us a move lower to consider the ADR has been met for today to the downside. And if we've already moved the ADR in one direction, that means we can move the ADR now in the other direction, right? And that's not bullish to have that bias. It's just wave form. It's just what price does, right? So I would like it to come down and hit that cog line 69.11 or, hit the ADR. That'd be great. But at the end of the day, I would call it good. My base case for today is that we stay inside the ADR and we don't get anything else done. That we just hold the line and try to normalize a little bit. We've had some big moves between Thursday and Friday's price, and that sort of violence needs to be answered. A calm day will be really helpful to the market. Today's floor pivot is greater than yesterday. That's bullish. Price opened above it. That's also bullish. We haven't hit it today, so we got an MDP, but we won't count that until tomorrow. MDP is missed daily pivot. This lower purple line is our daily floor pivot, and as you can see, price hasn't gone down there and touched it. That's why we call it an MDP. Now, we can't count it until tomorrow. At any point today, we could drop down there and tag that, and then it wouldn't be an MDP, right? So let's get through the end of the day, and then tomorrow when we come in, we'll look back and recognize if we hit it or not. There's a little bit of a strategy that goes into that. I don't trade the strategy, but it was worth learning so that you can then use the strategy as a part of your analysis. I've noticed over the years that that's been really helpful in picking up different analysis techniques. Lots of strategies out there that I don't want to trade, but they were worth learning just because of the insight that they give you. So if you want to know more about that, you can find it on YouTube. It's not my strategy. Just search for missed daily pivots. You should be able to find it. Shouldn't be hard to find. We are back above the weekly pivot so far, and we're not overly expanded beyond that weekly pivot. We're starting the week relatively close, which is a good place to start. If we come in on a Monday and we're already 3.5% away from that weekly pivot, it really argues against a continuation in the same direction, right? If we were up 3.5% to start the week away from that weekly pivot, or even below it, 3.5% to start the week, that would radically change what we would expect. But starting this close, it doesn't owe us a move because we haven't gone anywhere. It's another reason to think today could be a sideways day, just a day of healing. Now, because of the moves we've had in the last few days, the S&R lines are going to be really wide. So as we can see, R1 70.25, S1 68.11. It's a long ways off. There's no reason to think that we're even going to get near them, let alone hit them today. The ADRs are a lot closer since they're not so influenced from a single day or a 2-day move the way that these floor pivots are. All things considered, we had a relatively decent distribution last week, other than this speed bump up here that kind of threw it off. If we try to get that run to the upside, we've got last Monday or last Tuesday's price up there that we do need to negotiate with, but still don't have any reason to think we're going to get up there today. We're testing that point of control from last week already. We've cut below it. We've come back above it. Kind of want to see us keep it at this point. It won't act as support or resistance, especially when we're crossing back and forth through the level, unless we can get a considerable distance away from it and then come back into it. Then it might act supportive or resistive, right? So it's kind of the way it is with a lot of pivots. If you've been crossing back and forth through that level, then it's not going to act as a support or resistance. But get far enough away and then come back into that level, and it's much more likely to resist price or show some response to price. So how far is far enough? It usually depends on each product that you trade. So it's not going to be helpful at this point. It is where the greatest amount of participation was last week, and we're right in that zone now. And the whole thing is a wide distribution at this point. So it's not really helping us out. Not a lot of clarity in that. We're just stuck in the trash. Ten-day, 30-minute volume profile in TPO. It's a really wide distribution, and it's really nasty. There's no pattern, no setup, no insight here. The point of control is up against the value area top. There's not much above that value area top, and we're not going to hit these candles that made that point of control for at least half a week. So the only way we're going to see this point of control move is if we stall out and put in a lot of work, which is what I've been arguing that today is likely going to do. So if we can build it into this 69, 65 area, we could build out this point of control and bring it down here. That would be the idea, right? Get that point of control to shift down into this area. but we'd have to come up into that area and then stall out here and get a lot of work done. The TPO's point of control has already come down into the old school cog line 69.41. So maybe that's what we end up getting. That wouldn't be too bad if we're holding above it. That would remove that resistance that's right now over our head, get it underneath this for a supportive structure, but we don't have it yet. Friday gave us a VPOC until we hit it around 5. So that's done. If you're just marking VPOCs, then we don't have one. But if you're marking the point of control, that would be a good one to mark just in case we go back down to it again. I don't think there's anything out of this one, but that would be the idea, right? Now that's what the textbooks will tell you to do every day. Is mark the value area high, the value area low, and the point of control. Me, I've got enough pivots. I don't mark all 3 of those levels. And really, I only mark the point of control if we haven't hit it yet. And you can see that we already did come down and we've hit it. We've crossed through that level. To me, I don't need it, so I don't carry that. But an argument could be made that if we do head back down today, you're going to want to know where that level is. It's really close to the 32 cog line, and I'm already paying attention to 32. So that's good enough for me. This morning, there's no real insight between TPO and volume profile. Nothing really stands out. So at this point, we don't have anything. It's another argument for today being a sideways day with no real push. I think it's very likely that we just get a day of healing. So we do have our new range for the week. We looked at this on Friday, and it really wasn't offering that big of a change. It was signaling to us that we weren't in a hurry up and wait mode. There wasn't any scheduled economic events that made the market price a sideways week. So inside day breakouts, staying broke out is likely this week. Just not today, at least not so far, because we already had our inside day breakout. We didn't keep it and we gave it up. It's possible that we can get it again, but I think we're going to need a trigger to do that. And so far, there's no trigger scheduled. So where's it going to come from? We are back above the 10-week, or continue to be. We were underneath there Friday. We just didn't stay there, right? Between Thursday and Friday, we got underneath that 10 and we came right back up again. So this slope continues. Still don't have a drop down into a reset, and we don't have our breakover into 2 or 2.5. I still argue I'm looking for that 2.5. Now it could be, late February or maybe the March OPEX before we finally get there. But I am expecting it early in the year. What we're talking about is the S&P outrunning the 10-week by 2.5 or 3%. It's going to take a significant push to get that done. I've been looking for that kind of breakover since we've started setting these lower highs and lower flat lows, right? This. So we're going to get it at some point. The question is, are we going to get one of these first? Will it come with some really bad baggage and drama before we finally get that big breakover? At a 0.5% above the 10-week, we're fine. It's not overbought or overextended or anything like that. There's no mean reversion promised or anything. And we have plenty of room to move. Now, looking at the 10-day, we're above the 10-day just barely. We got this imaginary range, 0.5% above, 0.5% below. And when we're in this zone, order flow is calmer, right? The pace of the tape, the orders that come in, everything is just a little different in this area. It's like the calm in the center of a storm. So we're in that zone. The idea is that we can't stay here forever. We're going to come out of it, and we want to look for that push. So we're not overbought. We're not overextended. We haven't moved too far, too fast, and it doesn't owe us anything. All right, looking at what's down this morning, we got Bitcoin down, Nat Gas. The Mag 7 down volume is down, but the number is so odd that it makes me think something is broke this morning. Sometimes those tools we use can just act a little wonky, right? Either because they go in and they make an adjustment to an ETN or an ETF, they change the numbers, they change the weighting, they go in and they do something. If you see a number this far off, it says it's down 89.3%. I mean, come on. Something is obviously wrong there, right? So discount things when it has such a radical number like that. So we'll circle back on that, see what's wrong with the Mag 7 down volume. Otherwise, the other things that are down, but they're not down enough, the China group, KWeb, SMH chips, they're down, but not enough. We would want to see at least 0.5%, and we're not there yet. Bitcoin down 1.25%, and over a 5-day period, it's down over 10%. That's getting close to a bounce point, simply because of how far it's fallen. But don't stand in front of a boulder rolling down the hill, right? Just because it's fallen a long way and it makes us think it should bounce soon because of how far it's fallen, doesn't mean it's going to bounce. Trying to time that is like trying to catch a falling knife, right? Kind of where the phrase comes from. Looking at what's up this morning, gold miners, junior gold miners, uranium, expanded tech, more uranium. The Mag 7 up volume is up, but it was down close to 15%. So that's kind of the same argument as Bitcoin. This up volume was down so deep that it was kind of due a bounce just because of how far it had fallen. That doesn't make me feel very bullish. You see airlines and energy and building materials, but there's just not much here, right? And they're not even close to our benchmark of 0.5%. So another reason to think we're likely not going to get some breakout rally day today. We don't have market breadth. We don't have the sectors or the industries that we would need for a bullish or a bearish breakout. We don't have any juice. There's no 0-day flows at this point. We wouldn't see any anyways. So we'd need to get into open for those. There's nothing that we would normally attribute for a breakout with a push behind it at this point. So until proven otherwise, the argument is to expect a range day today. This is the current range. GTFO, we got to get out of this box before we do anything else. To the downside, that leaves a lot because we got all of yesterday to deal with. Now you can narrow some of yesterday by just focusing on the RTH. And then there's all of yesterday where we focus on this low down here. So to the downside, we got multiple levels. To the upside, all we've got is yesterday's high and then the high that we put in the Globex. And that's the way we want to run it, level by level by level. You can break all of this up with a halfback here in the Globex, and then an RTH halfback and a full move halfback. So that adds a little bit more. Remember, the base case for today is that we just don't do anything. If we stay sideways, we should stay inside the ADRs. Should stay inside of these two red lines. That doesn't mean that we can't wick outside and come back in again. But even if we get all the way down there and we tag that 69.11 and we get a little below that, I'd still expect that we come back up into it again. Unless we get a big headline or some other thing that triggers us higher or lower, then anticipate that it's just going to be a sleepy, slow, boring, sideways day. Maybe it looks a lot like Thursday's RTH session, right? Where we really just don't get a lot done, but we don't go anywhere. So what I got, guys, be careful, be safe, watch the clock. I'll see y'all tomorrow.